This week, we're going to be talking about corporate social responsibility and what it means to be a stakeholder. In this conversation, you have to listen to it in order to be able to do this week's assignment. All right, so to set up that conversation, I want to ask you, do businesses have a responsibility to society? Yes or no? Or is the answer like, no, their responsibility is just to improve revenues and profit? And then somebody else will be like, excuse me, what about the roads that are built and maintained so that customers can get to the business to buy goods and services? What about the street lights? What about the utility, the gas services, water services for the business? Who do you think pays for all of that? Okay, what happens if something goes down in the business and the business has to dial 911? Next thing you know, cops show up. Next thing you know, everything is all good. Unless you're a black person shopping, then it might not be all good. Okay, so what happened? You ever seen a business be on fire and the manager be like, all employees grab some buckets of water and get to work. Let's hurry up before this business burns down to the ground. No, you call fire. And then the fire people come in with a hook and ladder next to you, and then the fire is extinguished and everything is all good. Somebody has a problem, somebody gets hurt, you call EMS services. All of those services are created and paid for out of the pockets of society members. So businesses operate at the pleasure of society, and communities who understand that, they hold those businesses to account. And communities who do not understand, they all feel like, okay, business sure, do whatever you say, fine, okay, yeah. You the man. And so, no, you have to understand that, and you have to understand the responsibilities of those businesses in order to be able to operate in your community. All right, so let's go ahead and talk about that real quick. So, over here, a stakeholder group is a group that is impacted by a company's actions and decisions, or a group whose actions and decisions impact the company. There are many groups in society that are not stakeholders for a particular business. Hypothetically, think of the Catholic Vatican in Rome. So there are many businesses that their actions don't impact the Vatican at all. And whatever the Vatican does, it does not impact the business at all. Therefore, the Vatican is one social group in society that is not a stakeholder group for a particular business. However, there are many other groups such as employees, customers, consumers, government regulators, investors, suppliers. So there are a lot of different groups, and many of those groups right there are right here. The major ones are right here. But each one of these groups, whatever actions that company does, it has an extreme direct impact on all of these different groups. And these different groups can come together and do all types of things that can make this company go away, or actually this company can grow. So these are just 5 of the major stakeholders. And so we're going to have a conversation about the company's responsibility to each one of those. So let's start off with customers right there. So customers, every business has a responsibility to treat all customers fairly and honestly, and not to be withholding and being all sneaky and shady with customers. They have a responsibility to do that. With consumers, businesses have a responsibility as well. The difference between a customer and a consumer, think about a parent who takes a 2-year-old child to McDonald's to have a Happy Meal toy. Which one is customers, which one is consumers, or both? Is the parent a consumer? No. The only person eating that one Happy Meal is the 2-year-old child. So the 2-year-old child is a consumer. Is the 2-year-old child a customer? No. The 2-year-old child did not pay for the meal. The parent paid for the meal. So the one who pays is the customer. The one who uses or consumes is the consumer. Okay, sometimes a customer can be both, and sometimes they're different. All right, so consumers have a right to be knowledgeable about everything that's going on and be treated fairly and with respect. We're going to show a consumer bill of rights in a second. But first, companies have a responsibility not to collude, not to come together and engage in collusion. And so collusion is when 2 or more companies come together and they come up with a devious plan, a plan that's going to benefit them so nicely at the expense and to the detriment of another group, especially such as consumers. Companies have a major responsibility not to do that, not to engage in collusion. Think about what happened when it came to prices. Sometimes in the face of a national disaster, what happens to the price of a bottle of water, to some batteries, to some candles, to cups, to sanitation stuff? What happens? The prices jack up real crazy. And sometimes how it jacks up is sinful. And so companies have a responsibility not to do that. Think about what happened in March 20. Some with the prices of face masks, Lysol products, hand sanitizers, and think about what happened to the prices of those by many companies. So we're not talking about Lysol, the company, but we're really talking about the companies that sold, the retailers that sold those products. Many of them jacked that price up way, way high, and that's called price gouging, and that's actually illegal. You can increase the price up to a certain amount, but when you go super astronomically high, then that's actually illegal. And so companies have a responsibility not to do that. But many do it and they get away because government can't catch them all. All right, so over here, if you're like me, you got to put on your magnifying glasses. But this is the Consumer Bill of Rights. So all consumers, the first one, they have a right to safe products, products that will not hurt them and provide them harm. Second one is they have the right to be informed about all of the relevant aspects, the attributes of the products and services that they purchase. If there's something unsafe going on in there, or the product has a carcinogen in it, something that's going to cause cancer, or it has lead in there, or it's extremely unsafe to a small percentage of the customers. Consumers have the right to know that. Companies have a responsibility to make sure that if consumers want to be heard to the company, that there's a way for consumers to voice their concerns to the company. Companies have a right not to try to restrict consumer choice, especially like not to try to get rid of external competition so that consumers can only come to me and then I'm gonna jack up the price. Companies have a right to be educated about companies have a responsibility to educate consumers about their purchases. So if a consumer is about to purchase something one way that's going to help the company out in a major, major way, but the consumer definitely should not buy it that way, that organization has a responsibility to say, you know what, even though it would benefit us a lot if you buy it that way, you really shouldn't. You don't have to do all of that. And then the last one is consumers have a right to courteous service. And then a lot of us know that depends on your zip code. All right, so that's the responsibility to consumers, the first stakeholder group. The second important of the 5 groups is employees. So companies have a responsibility to treat employees fairly and with respect, to respect the dignity and humanitarian aspects of that relationship, not to treat employees like slaves or whatever. Second one, lots of employees, they want to balance work and life, and so companies cannot restrict. When it comes to life, some employees want to find their better self, whether it's by health, religion, socially. And so a company can't be like, you know what, I don't like you being distracted. So therefore, I'm going to have you working on Sundays. Matter of fact, you're going to work 7 days a week because I know you. You seem like you're the religious type. And if I let you off on Sundays, you're going to do some religion and then you're going to be distracted. So I'm going to give you a 7-day work schedule. So the company's trying to restrict the employees' pursuit of work life. Also, when it comes to professional, that's the third bullet, professional and career development, companies have a responsibility not to block employees when employees want to advance in terms of better career and professional development skill attainment. The fourth one, sometimes when companies have to lay off or fire an employee, what happens after? That employee sometimes need to be treated a certain way. There's certain communication. There's certain payments that need to be made. Companies have a responsibility to do the right thing and not just leave that person out there all by himself all of a sudden. And then the last one is companies have a responsibility to make sure that every employee in the organization is provided equal opportunity as anybody else, independent of the employee's race, their sex, their religion, who they love, how they love, where they worship, all those other type of demographic variables that have nothing to do with the job at hand. So that's 2. We just did consumers and employees. Now, the other 3 are right here. So the first one is investors. Companies have a responsibility to make sure that if you buy some stock in their company, companies have to make sure that they do their accounting properly. Their income statements that show changes in profit over time. That's important for sophisticated investors to pay attention to. Balance sheet show the structure of assets in terms of what is owed on that asset and what is owned on that asset, and that changes sometimes in time. And then also cash flow statement, how much money a company had at a certain point in time, how much money they brought in during a particular period, how much they paid out, and then at the end of that period, how much cash they had on hand. So companies have to keep those records, and then they have to make them available to prospective and current investors so that investors can make good decisions. Am I going to leave all my money in this company as is? Am I going to put more money, or am I going to take some of my money out? this company relative to other alternative options. Companies have a responsibility not to do insider trading. If you buddies with the top notch and they call you up, they're like, hey, look, man, an announcement is about to be made tomorrow. And when it happens, I'm telling you, our stock price is going to go up 3 times. You should buy as much as you can right now. And then you're like, all right. And I tell you, my buddy, and I don't tell other investors and I don't tell the public, I give you an inside advantage, and then you do that, then that's illegal. Or if I know that somebody's about to blow the whistle tomorrow, and once that whistle is blown, the value of our stock is going to go way, way down, and I call you like, hey, man, you want to sell as much as you can today, because trust me, tomorrow, that stock is going to drop from $300 a share all the way down to probably 5 cents a share. So get out tonight while you can. Insider trading, a lot of people have gone to jail for doing that. Misrepresentation of finances. Best example is check out Elizabeth Theranos. She's on trial right now. Some people call it the trial of the century. But anyway, her and her partner, they did all kinds of misrepresentation of finances, and it hurt investors. And so companies have a responsibility not to do that to their investors. Suppliers, companies have a responsibility to treat all suppliers properly, fairly. Don't be like making suppliers do certain things that's going to really hurt them unfairly to the company's benefit. And companies have a responsibility to local and international communities. Companies operate at the pleasure of the communities, and the communities do a lot of things that allow those companies to exist. And so sometimes companies got to give a little bit back financially in the form of charitable contributions to other places. All right. Also, organizations have a responsibility not to hurt the environment, whether it's the local community or Mother Earth. So it's cheaper to go the easy way, but the easy way is detrimental lots of times to the environment. So sometimes companies have to pay a lot of extra money sometimes just to do the right thing, to make sure that pollution is done the proper way instead of a way that's going to hurt everybody. All right. So in terms of the concept of accountability, you saw the good congresswoman and the good senator. You saw them going at some of those executives, trying to hold them accountable. Some of you will say, yeah, those executives were held accountable. Others will say, no, it wasn't. And so, Now, in terms of how companies accomplish that corporate social responsibility, there are different approaches. On extreme approach, you got companies that say, hey, government, you come with all your rules and regulations, but trust me, I love the community. I love my stakeholder groups. And so I'm going to look out for them way much more than you can ever tell me to. That's the proactive stance. And then you have on the opposite end, you have people like, you know what, government? You and your policies. I ain't thinking about y'all. Matter of fact, I'm going to get as many lawyers as I can. Sue me, okay? We're going to be in court, and trust me, I'm going to win. And besides, I'm 2 steps ahead of you, government, anyway. So I'm going to do whatever I can to make sure I don't do my corporate responsibility, okay? And so that's on the opposite extreme. And then in the middle, you have the accommodative stance. When the law comes out, those companies are like, okay, cool, fine, sure, no problem. Matter of fact, let me just do a little bit more than what the law says, just a little bit more, just to make sure I'm not in trouble. Accommodative stance. And then the defensive stance, those are the ones that they only do something when the law tells them to do something. When the law says, they'd be like, fine, okay, fine, sure. Then they do it. All right? So those are different approaches. Now, small businesses, when we talk about ethical behavior, what is considered ethical, what is not ethical, for small businesses, it's based on the individual core values of the people leading the organization. So that's, the general manager, the owners, the founder. That's ethics. When it comes to corporate social responsibility, which is a little bit different than ethics but related, corporate social responsibility, small businesses have to ask themselves, hey, beyond my employees and my customers and the owners, do I really have enough money to look out for all of my stakeholder groups right now? Can I afford to do this? So those are important questions. So that's it, everybody. Corporate social responsibility and stakeholders, that's what we just explained right now. So this week, I want y'all to have a nice little conversation.